Good morning or good afternoon, depending on where you might be listening to this live worldwide broadcast on Facebook. But my name is Terry Belts, and I am the CEO of the Belt team at Keller Williams here in McLean, Virginia. We're like literally 5 miles from the White House and like spitting distance from the CIA right through that window over there. And wanted to make you aware that we're starting a new weekly webinar series on real estate. We get asked a lot of questions from our clients and people we know about what's going on in the market or other types of things. And so every Wednesday at 11:30, we're going to be having a little hangout here and talking about stuff. So Terry Belt, this is my partner Tom Hanton.
Good morning.
Or good afternoon.
Or good afternoon, that's true.
We have people sometimes that watch this from overseas.
That's true.
Or it could be really early morning in California. But so I thought we'd just kind of like dig into it.
Absolutely.
I don't know about you, Tom, but we've been getting lots of questions lately, like what's going on in the market. And
from buyers and sellers.
Buyers and sellers, and even people that aren't buyers and sellers now, but they're thinking about it for the future. So it's a very common question, and I find it's not a simple answer. Because people will read the national newspapers, USA Today, Wall Street Journal, watch the news and all that stuff, and they always have national real estate news. And what we've learned over, how long have you been in? 10 years?
Almost 10 years, yeah.
Well, you've been buying properties, selling properties and stuff, yeah.
Yes, a lot.
Yeah. And I'm a second generation realtor, and I'm a rookie at 30 years in the business. So what we've learned is that real estate is very much a hyper-local business. So while you can read the national headlines and you can see what you think the market's like, they don't always apply to what's going on here in the Washington DC area.
They can change from neighborhood to neighborhood and street to street.
Yeah, zip code to zip code, school district to school district, price points, property type. But on the national thing, you do have to pay attention to that, right? What we know, so Keller Williams is now the #1 real estate brokerage in the entire world for residential real estate. And so we have lots of data, lots of information that we track. And what we're hearing in a lot of other markets outside the Washington, D.C. area, we've always said we live in a bubble here, and I think that's true.
We do.
But there are leading indicators for real estate markets. So what we're hearing in Florida, Texas, parts of Arizona, even parts of California, Seattle, a lot of the areas that had really come back very strong from the last downturn, they're starting to see some softening. So what does that mean? It's taking longer for properties to go under contract. Buyers are backing out of contracts. So I think pricing has gotten so high on a national basis that affordability is a challenge, and buyers now are getting a little bit on home inspections. Yeah.
The word correction.
They feel that they're overpaying.
Yes.
They feel that they're overpaying. Yeah. So that's what's going on nationally. And a lot of markets we're seeing. It's not happening here in the DC,
not in a broad
Northern
sense,
Virginia
but
area.
it's happening.
In certain price points, right?
The buyers are sensing it, that just like to your point, as far as they don't want to overpay, because they've seen
interest rates gone up a little bit.
Absolutely, but interest rates have gone up. I mean, a point over the last year, and as a
percentage. So if it went from say 4 to 5%, just in round numbers, that's like a 25% increase in the cost, right?
Yes.
Yeah.
And every point, I mean, it's just simple math. Every point is 10% on the value of the house.
Yeah.
As far as what you can afford, what you can't afford.
Yeah. So, while it hasn't happened, let's call it a shift in the market. So some of these other markets nationally are starting to shift, and which brings up
the book.
So in 2005, the chairman of our company, Gary Keller, wrote this book, and it was called Shift. And at that time, you may or may not recall, but the market in 2005 was. Matter of fact, I think that's how we met. I was selling your house
back in the day. Yeah.
Upper end, nice house, and I think we caught it right before the market shifted. But when he wrote this book, everyone thought he was crazy.
Everybody poo-pooed it.
The market was just like it is today.
Yeah.
Very strong, very healthy, all good signs in the economy and stuff. And he did have data though, and information, and was paying attention. And it didn't happen quite as fast as he thought. But by 2007, that's when Shearson Lehman Brothers went under, and the jumbo mortgages were gone. And we started to see a major shift, and lo and behold, he was right. So what we're hearing from Gary Keller and his research
There's no new book,
professionals and
but
in
there
Austin,
is writing on the wall, if you will.
in Austin at headquarters, they are preparing us to prepare for a shift in the market. So therefore, I think we should prepare our
Absolutely.
sellers and our buyers.
Yes.
So sellers, like if you were a seller now and you knew what we knew, what would you do?
If I'm a
Or
seller,
what advice would you give a seller?
If I'm a seller or an investor or a friend, a family member that I'm going to be talking to, I tell them over and over again over the last couple months, if you're thinking about selling in the next 12, 18 months, now is the time. Not 2019, not 2020. We were sitting out there, I mean, we've been on that market like this
How
for
many
such a
years are
long
we
time.
into? 9 or 10 years since
Over
the
that.
2007
11.
was when the correction last
What,
started.
11
and now
years.
it's 11 years, yeah. So typically, historically,
6 to 7.
yeah, it's usually 7-year cycle
Yeah.
or whatever. And so yeah, I think it's just a matter of
Like
when, not
a
if.
better analogy, we're
Yeah.
playing with fire. I mean,
Yeah.
it's great for the sellers right now.
So it's a good time to be a seller.
Absolutely great time to be a seller because I mean the inventory's low, which will lead us into
And
another.
the buyers are still confident where they're still buying,
Yes.
right? Okay. Yeah. So we're
So-
at that kind of that top of that curve,
Right.
somewhere on the top of the curve, but kind of cresting.
It's kind of like
Yeah.
if you're investing in the stock market, over time, your stocks will always increase, always have.
Yeah.
Same thing with real estate, but there's always hills and there's peaks and valleys, if you will. We're at the peak.
Yep.
A valley's coming up, so you can gamble to wait it out another year.
Yeah, every cycle's different. So I remember when I first got into real estate in the late '80s, very similar type of, but what caused the shift at that time was different. And the same thing in the late '90s. I think it was the .com thing that did it. And then in 2007, it was more. The lending standards were,
Right.
I mean, if you had
if
you had a pen and a pulse,
Yeah, you didn't have to have a pulse.
you had a loan, and
Right.
that's all changed this time.
Correct.
But there's other factors going on, and
And
I
it's
don't
not-
think it's.
And it's you just gave the analogy of all these different reasons or causes. The cause is irrelevant. The cause.
The fact is, it's happening.
The fact that it's going to happen
Yeah.
is the only thing that matters.
Yeah.
Who cares why I lost money? It's I lost money. That's what the seller or the buyer is going to be thinking. So we have to educate our clients and tell them now is the time if you're selling.
Yeah,
So-
I would agree. I mean, if you're thinking you're going to sell sometime in the future, I'd do it sooner rather than later, just to hedge
Definitely.
out the
Absolutely.
potential
Absolutely.
correction or shift, right? So, one thing I forgot to mention on our webinar here, we invite anyone that's watching this. I hope someone's watching, at least one person, to ask us if you have any questions on this subject. And even if you don't have a question about the potential change in the market, you may want to just ask any other question. We're glad to chat about it.
Yeah. We've got I'm getting a question here. It says inventory is low. How does that affect me as a seller? Do you want to take that?
I know the answer to it. Do you know?
A lot of people would say, well, that depends. Well, that's true. It does depend. It depends on your house, your neighborhood, and what is.
To me, it gets
but-
back to supply and demand.
Absolutely.
When
It
I
is
was at
simple
Georgetown, I
economics.
took a couple economic classes, and one of the fundamental laws were supply and demand.
Right.
So right now, if inventory is low, there's less homes available for sale,
Right.
and there are a lot of buyers. How does that benefit a seller?
That tells that as far as economics go, it's not any different for the house versus a product. That seller now is entertaining multiple offers in many
So
circumstances.
we're in a seller's market right
absolutely
now.
a seller's
Yeah.
market.
Yeah.
Absolutely, it's been that way for quite some time.
It's been low inventory for a long time, and in fact, what we consider call it a balanced market, whether it's
Healthy
nationally
market,
or
yes.
hyper locally, is about 5 or 6 months supply of homes. So
Right.
that would mean if today no one else put a house on the market
Right.
for the next 5 or 6 months, after 5 or 6 months there'd be no homes available. And so back in 2005, when we were similar to today, we had about a 1 to 2 month supply of homes. How many
Right.
do we have now?
Right now, it's under 2.
and then some areas like Vienna,
It's less than that.
less than a month, right?
Right.
And even McLean on the higher price ranges now are probably 2 to 3 months.
Which
supply max.
if you're working with buyers, you see it. Well, I see it as a listing agent as well. But when I'm working with my buyers, I'm seeing that there's not just me and one other person making an offer on a house.
Yeah.
It's 4 or 5 other people writing an offer on the
So
same house.
how I think the other
So-
question was, how does it affect me as a buyer and a low inventory?
And as a buyer,
Yeah.
the words.
Let me
the
ask you a
words,
different question. Can you wait for a property to come on the MLS? Or would it be good to hire someone to be proactive?
You
go out there
have to be
find
ready. The answer to your
off-market
question
properties?
is you need to be aggressively ready to make an offer.
And your agent has to be proactive.
Absolutely. You need to be ready both
Like
financially.
find these properties before
find the
they go
properties.
on the market.
Well, yes, absolutely.
Have you done that ever?
All the time. All the time.
That's good.
So, well, I think we're running out of time. This has been great. We're going to do this again next week.
What are we going to
So-
talk about next week? You know,
It's kind of, we've got a few things on the plate.
hot dogs,
We're going to be
chili dogs,
We'll be talking about chili dogs and hot dogs. Might be meeting over at the Vienna Inn.
hyper local analysis of the
Hyper-local.
market.
It's a good stomping ground for a lot of people that have been born and raised in this area like myself. So it should be fun.
Excellent.
So hope to
Excellent.
see everybody next week.
Have a good day, everybody.